Happy Monday, traders. It's 8:01 a.m. Chicago time on Monday, the 15th of May, 2023. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This is episode number 2469. We're going to follow our routine here and jump right into the convergent trading pre-market summary sheet. As always, I highly encourage you to follow convergent trading, conv trading, on Twitter, twitter.com/conv trading. This sheet drops on there at approximately 8:50 every morning. The current market posture, risk posture is mixed. It's a little bit higher, a little bit earlier. It's come off a little bit. But overall, we're opening in a mixed posture. Nothing major in terms of earnings. We did have Mitsubishi, but this whole week doesn't, in terms of earnings, we don't have any huge movers or anything like that, so not too concerned about it this week. Being that we're here, I do want to talk about the what the major releases are that you should be aware of. And by the way, this week has just a ridiculous parade of Fed speakers. Today we had Bostic. We have Bostic at 8:45. There were comments from Bostic this morning on the news feed. On CT News, we have Kashkari at 9:15 Eastern, which is in about 10 minutes. We have Barkin, we have Fed's Cook, and then tomorrow we have, Fed's Bostic again. We have ECB's Tominin, ECB's President Lagarde. We have Fed's Williams, Fed's Logan tomorrow, Fed's Bostic tomorrow. Wednesday, we have, I saw one, BOE's Governor Bailey speaking. We have ECB's Guindos. We have just a ton of them. Fed's Jefferson on Thursday, Fed's Barr. I believe Jefferson was nominated by President Biden for something, I think it's vice chair of the FOMC or something. We have Fed's Barr on Thursday. We have, they just go on and on. On Friday, we have Fed's Williams, Fed's Bowman, and then we have Fed Chair Powell at 11 a.m. on Friday. So there's a lot of that. In addition to that, this evening we have Australia's Westpac Consumer Confidence Index for May. At 9:30, we have the RBA meeting minutes out of Australia. At 10 o'clock, we have industrial production. Tomorrow, we have the unemployment rate out of Great Britain, claimant count. We have the Zoo Economic Sentiment Index for May. So we're starting to see some May numbers here. And then we have the inflation rate out of Canada for April, retail sales out of the U.S. for April, and in Japan's GDP growth for Q1, which is stale. It's a prelim number, but it's stale. And then on Wednesday, we have building permits, balance of trade from Japan as well. And then on Thursday, we have GFK consumer confidence out of Great Britain in the evening and an inflation rate out of Canada. And then Friday, we have Fed's Chair Powell. Those are the headline scheduled releases throughout the week here. What's on deck? Debt ceiling. There seems to be some progress being made over the weekend. We're seeing a pop as a result. We saw some short covering coming into Sunday's session. Reports are over the weekend that differences narrowing, multiple Fed speakers today. There is a meeting of the principals of government regarding the debt ceiling tomorrow as well. We do get the New York Empire State Manufacturing. We did get that. That's the first actual official number for May. It's lower than expected. And then Fed's Goolsbee said need to monitor more than normal data sets and be attuned to credit. A lot of the impact of rate hikes is still in the pipeline. Newmont, which is a mining company, to pay $19.2 billion for rival Newcrest Mining. I remember owning both in my metals portfolio. Securing position as world's largest gold miner and boosting copper resources. Yeah, they're just gigantic, Newcrest and Newmont. One Oak to acquire Magellan Midstream and $19 billion energy pipeline. OpenAI CEO Sam Altman will also testify before the Senate panel today. Everybody's terrified of this AI and the proliferation and potential job losses as a result of AI. Looking at the S&P is P-shaped, 164,000 contracts have traded. I want to draw your attention to the gray box. It is Monday, and these rotations, which generally are only shared with Convergent members, are being made available to the public. These rotations have been updated. You can see the S&P stayed stable at 5, 4.75 up, 5 down. And the NQ has dropped to 1775 per rotation, and the RTY has the Russell has dropped to 3.2, and then the Dow has held steady at 36 points and Crude at 24 ticks. What do harmonic rotations mean? It's written at the bottom there in a fine print. Essentially, it's a quantitative study looking back 20 sessions for the RTH for each product, and it's measuring the edge of what we would consider to be normal, the edge of one standard deviation of 1 minute rotations in that product, and it just tells us how much room the product in its normal cycle requires in terms of points before we consider it falling out of what we would consider normal, okay? Again, P-shaped profile overnight, so short liquidation, short covering. We started at the low, we bounced at the high, and we've come off since. 165,000 contracts, which is in line with what we've seen over the last couple of weeks. The inventory is 58% long. Doesn't really mean much in a short covering profile. And then 29.5 points of range, which is pretty good compared to what we've been receiving over the last few weeks. The point of control is resting right on top of that mid-century figure at 41.53, the low of 41.26. So what's important to note here, by the way, and we'll dive right into the charts. Here's the S&P. Here's the S&P. Essentially, we've been in balance for all these days here. 1, 2, 3, 4, 5, 6, 7, 8. Really, the last 6 days, I really should pull this back here. The last 6 days, we've been in a super tight balance. Weekly range of about 57 points, like just very, very tight, with a gap on top and a gap below. So what this is saying is, and we've built up quite a bit here at the 50. This is the MC point of control. It's been so for quite some time, for the last approximately 6 or 7 weeks. This thing is coiled to pieces. And so really what the market is saying currently is there's just nothing to price in, and we're waiting for further information. This is what it's saying. So as you're coming in here, don't forget to look at the big picture and look at where we are. And this is where we are. So the key range that we're dealing with here is really 67 to 69 on the top side, and 41, 11, 12 to the downside. I'll show you a different chart that explains it a little bit better. We are really, really coiling. And because we're really, really coiling, the normal response from traders is to become complacent, is to become relaxed about what the what the market is doing, to pick up some bad habits, potentially just trade in the middle of nowhere. And I'm going to warn you that once we break out of this range, we may see a very strong move. The expected range projection for that move would be 42.24 to the upside, or 42.26 to the upside, and about 40.24 to the downside. So it's if it breaches, we may see a really big up or down day. Here's another chart that shows it a little bit better. Let's squeeze it back. So you can see I drew these lines a while ago. I've been talking about these lines, these zones for quite a bit, okay? And you can see that Friday, so I've had these zones up for since about a week and a half ago. You can see that Friday tapped our support zone to the tick, and it pushed against our resistance zone pretty well there. And that's where we are. We have a gap above right up here, and we have a gap below right down there. And unless we break out of here, directional moves are not expected. So you have, because the market operates in fractals, if I'm looking at a 1-minute chart, I might be seeing a trend, or a 5-minute chart. But the big picture and the big money is seeing this as sitting sideways, and we keep flirting with the 50-53 area. We went to 56 this morning, and we're holding steady in the middle of the range with settlement from Friday at 41.38. The prior settlement was 41.40, and I'll show you here real quick what I expected on Friday, which didn't work out. On Friday, we opened in a gap up, and the expectation is it might check to the downside, maybe fill the half gap, and then start to push towards 41.70, and then squeeze to 41.83. That's what we're looking for on Friday, and that just did not materialize. What materialized is a test of the prior settle plus some. It ended up taking a prior settle, and it ended up pushing all the way down to 41.11 yet again. So it's tough to be patient, but you can see that these resistance levels are kind of moving tighter and tighter and tighter, and at some point this market will break. It cannot stay in this range, and generally I'm not definitive about anything when it comes to trading, but I can tell you that it cannot stay here. The more we stay in here, the more we're likely to coil. We are forming on a bigger time frame. We're forming a bit of a head and shoulders. It's kind of tough to see here, but we're forming this head and shoulder like that with the neckline right against the 41.11. So to me, if we push back down to the 41.11 and it starts to break through, that's a breakout trade to the short side to move back to the 4100 and actually all the way down to the 4070, all the way down here. Just remember, in this kind of an environment where we have a box structure, let's draw that box on here. So the box goes there to there, okay? If we have a box structure, if it fails, if it pushes down and it fails to check the bottom side, let's correct this box. To check the bottom side, if as anticipated, it fails to push through, then what you're looking for is a push back into the range, a weak pullback to the downside for a long, and for that, you're really looking from an auction market perspective, you're looking for it to check the other side of the box. So 70, so basically 11 to 70. If it tries to push through the 70 and fails, pulls back and gives us a weak retest of the high, then we're looking for a short all the way back to the 11. For those of you who like to swing, I don't like to swing. And so the idea, though, is that the more coils, the more trapped the longs or the shorts are, the more likely you'll see a very strong move, a big trend day up or a big trend day down. And that may come this week with this debt crisis and this nonsense. At a minimum, they may extend the ceiling, the debt ceiling, just enough to continue to squeeze for whatever their special interests and constituents and corporations that control these politicians want, so they could try to get it. But in either case, we're waiting for news, and until that happens, we are stuck in the middle here, stuck in the middle with you, just like the song says. So that's the summary of all of it. There's not much more to say than that. We have this same kind of action in the NQ, except the NQ has broken its box and it's still struggling to continue. We're still, the NQ is in a precarious situation here in that it has been a lot stronger. The NQ is kind of foretelling the direction that we may go, yet it is not kind of moving directionally. It's not squeezing through very hard. It's, on Friday, it fell right back to the prior week's close. And it bounced off of there to settle right at the edge of the range here at 13,396 or 13,400. So it's just there's a little bit of divergence between the NQ and the ES. There's definitely a whole lot of divergence with the Russell. The Russell, just an absolute dog here, just unable to break this trend line going down, and it's formed this channel. It just has no inflow. You would expect the Russell to at least test the opposite side and kind of go across as it sits in balance, but every time it pops through that 1790 into the 1800, it finds sellers right in here. So the levels, the red levels, if I was to put them up here, would be very simply right here. So that would be one area for the Russell. Okay? And then if I was to put a support level in here, it would be just the bottom of the box right in here. You could see it in the price action very, very clearly. These are basically what we call stock zones. Stock zones at Convergent. Okay? So that would be your support stock zone. And then the Russell is just kind of stuck in between and unable to lift, even in the in this overnight action. It has lifted a little bit, but it's only moved up to its MC point of control at 1760, and I'm suspecting it'll be weak trying to lift from there. So here's the my favorite, the crude oil. Crude oil tried to test, as we talked about several times, the 74, went to 73.86, fell out of the middle box, retested the middle box. This is beautiful right there. Retested the middle box only to move to the lower box. And now what we do is we look for, by the way, in case you have not tried Edge Pro X, I strongly suggest it. I mean, it has so many good tools in it. So let's look at, actually, I want to check this. So this is balanced till the breakout. There's balance until the breakout. Boom, right there. So see this profile, the point of control of this profile is at 68.70. That becomes the target right down here. That's this nubbin right here at 68.70 in crude. If crude continues to the downside, that becomes your key test target. Otherwise, what it needs to do, what it's very likely to do, is to push up above this 7140 area. If it pushes up above the 7140 area, it's very likely to test the next key area. But it's been very, very technical. It's been very, very technical with just a beautifully defined acceptance and high volume node, low volume node, composite here based from the high with an excess low, with clear rejection at the low, very thin volume at the low. That was just a quick flush. So crude to me has been the cleanest play. Again, I encourage you not to trade crude oil, and instead would encourage you to look at the MCL, the micro crude, which is financially settled. One quick announcement. I leave for London on Wednesday night, Chicago time. I'm going to be in London Thursday morning all the way till May 27th. So I am not likely to do a trader bite Thursday, Friday, and the entire week next week. A message will be sent out every morning to remind you of that. Make sure you come back after I return. I'll do a full recap and catch us up at that point. But just a heads up and a warning, Thursday, Friday, I will not be around. And then I'll be gone all of next week. Okay, so I'll be traveling in Europe and I'll be back. It's for business. So some big things coming, and some of it requires this travel. So I'll be gone for that time period, okay? So I'll leave you with that. Don't forget to hit the like button. If you're not subscribed to the channel, it's free. Please hit the subscribe button just so the channel can get promoted and can get discovered by other traders who are looking to trade professionally for the long term as opposed to looking for entertainment or for a flash in a pan indicator or system. This is the way to sustainably trade, in my opinion, for an entire career. I've been trading like this since 2005. Before that, from about 2000 to 2005, I was a very high volume scalper, and I made the very, very difficult transition to become a structured trader. And to me, this is, I have not really changed how I've traded since I came to this approach in 2005, and I believe it's a very sustainable way to trade. And this is why I'm sharing it, and I'm doing it in over close to 2,500 episodes, and doing it openly for the public to consume for free. Good luck, and I'll catch you tomorrow morning. Take care.